Good morning, my dear students. This is Dr. Bala, going to discuss about fundamentals of accounting. It is one of your modules for BBA semester 3. There are different units. The first unit is going to cover what is meant by accounting, what are the needs and the importance of accounting, the meaning and the definition given by various experts and various accounting institutions. There are different branches of accounting like cost accounting, financial accounting and management accounting. There are different functions of accounting, that is to provide the financial information to the investors, supporting forecasting, helps in decision making, etc. What is meant by bookkeeping versus accounting? What are the principles followed and the concepts are applied in accounting aspects? What is the nature of accounts and the rules of debit and credit? That is British approach and American approach. How the transactions are entered into the accounting records, on what basis, what are the principles we have to follow, and once the entry is made in journal and how it is posted into ledger account, eventually how we are going to prepare balance sheet. Business is an economic activity undertaken with the motive of making profits and to maximize the wealth of the owners. The business activity is carried out by people coming together with a purpose of common cause. The business enterprises may be proprietorship. A single person starts a business with his very limited capital and very limited knowledge in business and customer relationship. He is starting. If he wants to expand his business, he is unable to find the fund and he try to find other like-minded person as a partner who has money or managerial skills or business experience and exposure. The liability, if there is any profit or loss, that is shared by the partners equally or proportionate according to their partnership agreement, partnership deed. But the partnership also is not supporting to run a big business firm, because the big business firm requires huge capital to invest in. So the next form of the business is corporate or company. That is the big organization. The funds are mobilized from the common public through issuance of shares, stocks and debentures. How this business are running, on what basis those business is ascertaining profit and loss from their transaction, and what are the rules are followed and what are the social values, because we have to come to the estimate and the judgment. And apart from that, whatever the profit earned out of the business, we are liable to pay tax to the government. So as per the statutory norms and their requirements, we have to do the business. While these variables could be different for different businesses, different countries, etc. The basic purpose is to add value to a product or service to satisfy customer demand. The basic purpose of business is to make profits. One must keep on ongoing track of activities undertaken in course of business. There are two basic questions are asked that is to be answered. When we do the business, what is the result? The result is either profit or loss. What is the position of resources acquired and used for business? What are the resources we are acquiring? We are raising the fund from the public or any other source. The same thing is invested in land, building, machinery and raw materials. And how those resources are allocated properly and how it is distributed as a dividend to the shareholders eventually. The accounting is defined by American Institute of Certified Public Accountants. Accounting is the art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of financial character and interpreting the result thereof. We are just taking the business is a start with a small transaction. It is buying and selling, giving and taking, income and expenses. So we are classifying whether it is assets or expenses, income, etc. and summarizing the same thing for a particular period and which are in monetary nature. So apart from the monetary aspects, there are qualitative aspects also there in business. That is the satisfaction of customer, the loyalty of the consumer, like that, which cannot be accounted in financial accounting. The other definition given by the American Accounting Association in 1966. It is the process of identifying. We have to identify what kind of the transaction and measuring, that is the unit of measure, and communicating economic information. We are communicating only financial or economic information to permit informed judgments. So it has some basic concepts and principles that gives some judgments and decisions by the users. Who are all the users here? The shareholders, employees, consumers, government and the academicians like you and me. There are different functions of accounting. One is to measure the economical value. Without the measurement, we cannot assess, we cannot taken into account for any financial report. With this information, we can forecast the future course of action. Based on the current and past activities, past performance, we can predict the future course of action, the future volume of sales and the profit, etc. The information derived from the financial accounting, we can take in any decision related to the expansion of business, shutdown of the business, launching a new unit, etc. And this information helps us for comparison and evaluation. Without the comparison, we cannot go for any development activities. And we can compare how best we have done from the previous period. And we can have control over some expenses, especially in business is to reduce the cost and maximize the profit. We have to check wherever possible for reducing the cost or the optimum usage of resources, either human labor or money or machinery or fuel, etc. And then the government regulation and the taxation. always the government is seeking tax from the companies. So the accounting principles should be followed perfectly so that the financial statement can be generated perfectly and right one, from which the government can levy tax. There are different types of accounting. One is financial accounting. It is related to financial activity. It covers entire information in the business organization. It is just like a data entry aspect, and it gives the financial results for the period and the state of affairs on the last day, the accounting period. We call financial accounting as stewardship accounting. And second is cost accounting. It is mainly used in manufacturing units. It is related to what is the cost of every product, right from the fixed cost, variable cost, labor cost, raw material cost, selling and the distribution cost. All these costs are considered to arrive the cost of production, and we are adding margin to that product and selling in the market. It gives the information for controlling operations with a view to maximizing efficiency and profit. It is an control accounting. And eventually, accounting related to the management planning and decision is management accounting. It is a decision accounting. What are the importance of accounting? It is the systematic and comprehensive recording of a financial transaction relating to any business. It is a process of analyzing, summarizing and reporting these transactions to the tax collection agencies and oversight agencies. It helps us to ascertain the financial position of the business. It helps in recording, classifying and finally summarizing the transaction in a business. This enables coming up with a well-analyzed financial document like balance sheet, trial balance, among others, when accounting is done properly within the business transactions. It supports in planning and budgeting future course of action. The accounting gives the past performance so that the people can predict the business is going to achieve something based on its resources and others. So the lenders can lend money and bank also sanction loans to the company. And it supports keeping records. The number of transactions are taking place. Unless it is recorded, the company people is unable to trace what transaction they have done, what are the transactions properly done or any missing, anything cannot be traced out. This information supports in decision making and it provides the financial position of the firm to the investors like shareholders and creditors. And it reports periodically about the profits. The working capital is very essential in a company. Even though the fixed assets are more, without working capital, the management cannot run its business effectively. So, the management has to find out what are the cash flows for the particular period. The cash flows through the sale of goods, stocks, sale of goods. So that is finalized so that they can meet out the operating expenses in the business flow. The bookkeeping is defined by quarter. It is a science and art of correctly recording in books of accounts all those business transactions that result in transfer of money or money's worth. Bookkeeping is a mechanical task. It is the collection of basic financial information. It identifies the events and transactions with financial character. It measures the economic transaction in terms of money. And it records financial effects of economic transaction in the order of its occurrence. It supports in classifying the effects of economic transaction. With the help of bookkeeping, we can organize statements known as trial balance. There are differences between bookkeeping and accounting. Bookkeeping is to keep systematic record of transaction and events of financial character in order of its occurrence. Whereas, purpose of accounting is to find out the result of operating activity or business and to report financial strength of business. Bookkeeping is carried out by junior staff. Accounting is done by senior staff with the skill of analysis and interpretation. The objectives of bookkeeping is to summarize the cumulative effect of all economic transactions of business for a given period by maintaining permanent record of each business transaction with its evidence and financial effects on accounting variable. On the contrary, the objective of accounting is not only bookkeeping but also analyzing and interpreting the reported financial information for informed decisions. Bookkeeping is a foundation of accounting. Accounting is the language of business. Bookkeeping is an input of accounting. Output of accounting permit informed judgments and decision by the users of accounting information. There are different accounting concepts and conventions are used. There are three basic financial statements are prepared. One is profit and loss account, which shows the profit or loss for a particular period. Second is balance sheet, which exhibits the financial strength of the business as on a particular date. The cash flow statement that describes the movement of cash from one day to other. There are different theories of accounting is followed. That is grouped into three, namely basic assumptions, basic principles and modifying principles. Let us go one by one. What are the basic assumptions are? It has basic principles. Without any principles, we cannot do any record. Second is going concern concept. It is understood that the profit or loss is ascertained for a particular period, but still there remains asset and liabilities in the business firm. So it is believed that the company is going forever. So it is going concern concept. And money measurement concept. It measures only the economic value in terms of money. It never mind about the qualitative aspect of satisfaction of customer, loyalty of the customer, etc. And accounting period concept. The account system is followed to ascertain profit or loss or to know the fair and true view of the financial position for a particular period only. Accrual concepts. What are the transactions taking place in the business in the economic nature is recorded irrespective of the cash transaction or credit transaction. Sometimes the sales is made on credit. After some time from the sales taken place, the amount may be collected. So, as per this accrual concept, whenever the transaction arises, it is recorded. There are different basic principles. Revenue realization concept. The revenues are realized. What is meant by realization? See, when the goods are sold, the revenue is received. That is realization of revenue. And the matching concept. We are matching with debit and credit, income and expenses, income and giver and receiver, like that. Full disclosure concept. From the accounting point of view, no information is hidden. Everything should be disclosed to the concerned informed users. Dual aspects concept. We are following double entry system. So debit and credit aspect is there. Debit and credit always equal. If it is not so, there is a mistake in it. There is a error in it. Verifiable objective evidence concept. Whatever the transaction is made in the business organization with the base document of voucher. That voucher is prepared and approved, signed by all the people. Those who are in the accountant, cashier and approved person, if it is subject to the terms and condition of the company. Historical costs. We are accounting all the costs as per the chronological order from the time basis. The balance sheet equation concept. The balance sheet has both the side assets and liabilities. The both assets and liabilities should be equal. Modifying principles. One is materiality concept. We are considering material thing related to economic aspects for the financial aspects. And consistency. Whatever the information we derived from the financial statement can be used for different analysis and interpretation. Wherever it is used and analyzed, the data should be consistent throughout the analysis. Conservatism concepts. The rules and regulations, even principles, are sometimes conservative in nature. All reports or financial statements are prepared for the particular period of time. And the industry practice concept. There are different industries are there, namely agriculture, service industry and manufacturing industry. See, based on this, the nature of transaction and the nature of accounting principles and statement are different. So based on that, it is followed. Double entry system was introduced by Luca Pacioli in 1494. He is called as father of accountancy. He is an Italian mathematician. First published his comprehensive treatise on principles of double entry system. The use of principles of double entry system made it possible to record not only cash but all sorts of mercantile transactions. It had created a profound impact on auditing also, because it enhanced the duties of an auditor to a considerable extent. What are the features of double entry system? Every transaction has twofold aspects. That is, one party is giving, another party giving the benefit, another party is receiving the benefit. Every transaction is divided into two aspects, that is debit and credit. One account is to be debited and the other account is to be credited. Every debit must have its corresponding equal credit. Advantages of double entry system. Since personal and impersonal accounts are maintained under the double entry system, both effects of transactions are recorded. It ensures arithmetical accuracy of the books of accounts. For every debit, there is a corresponding and equal credit. This is ascertained by preparing trial balance periodically or at the end of the financial year. It prevents and minimizes frauds. Moreover, frauds can be detected early. Errors can be checked and rectified easily. The balances of receivables and payables are determined easily. Since the personal accounts are maintained, the businessman can compare the financial position of the current year with that of the past years. The business can justify the standing of his business in comparison with previous year's purchase, sales and stocks, incomes and expenses with that of the current year figures. It helps in decision making. The net operating results can be calculated by preparing the trading and profit and loss account for the year entered, and the financial position can be ascertained by the preparation of the balance sheet. It becomes easy for the government to decide the tax. It helps the government to decide sickness of business units and extend help accordingly. The other stakeholders like suppliers, banks, etc. take a proper decision regarding grant of credit or loans. Even though many advantages in double entry system, there are limitations too. The system does not disclose all the errors committed in the books of accounts. The trial balance prepared under this system does not disclose certain types of errors. It is costly as it involves maintenance of numbers of books of accounts. The concept of accounts. An account is defined as a summarized record of transactions related to a person or a thing. Example, when the business deals with customers and suppliers, each of the customers and suppliers will be separate accounts. The account is also related to things both tangible and intangible. Example, land, building, equipment, brand value, trademarks, etc. are some of these. When a business transaction happens, one has to identify the account that will be affected by it and then apply the rules to decision of accounting treatment. Accounting principles. Personal account. These persons could be natural persons like Suresh, David, Anil, Ranis, Mansa, etc. The persons could also be artificial persons like companies, bodies, corporate or association of persons or partnership, etc. Accordingly, we could have Videocon Industries, Infosys Industries, a charitable trust, and so on, and Janata Bank, IZB Bank, Indo-Jambian Bank, etc. There would be representative personal accounts as well. Although the individual identity of persons related to this known, the convention is to reflect them as collective accounts. Example, when salary is payable to employees, we know how much is payable to each of them, but collectively the account is called salary payable account. Similar examples are rent payable, insurance prepaid, commission pre-received, etc. The students should be careful to have clarity on this type, and chances of error are more here. The second type of account is real account. It is related to money or money's worth. That is tangible real account, assets that have physical existence and can be seen and touched. Example, machinery, stock, cash, vehicle, etc. Intangible real account or represent the possession of properties, have no physical existence but can be measured in terms of money and have value attached to them. Example, goodwill account, trademark account, patents and copyrights account, intellectual property rights account, and the like. The final one is a nominal account. These accounts are related to expenses and losses, incomes or gains, salary and wages account, rent or rates account, traveling expenses account, commission received, loss of fire account, etc. The concept of debit and credit. In W&D bookkeeping, debits and credits are abbreviated DR and CR respectively, or entries made in account ledgers to record changes in value due to business transactions. Debit is derived from the Latin word debitum, which means what we will receive. It is the destination who enjoys the benefit. Credit is derived from the Latin word creder, which means what we will have to pay. It is the source who sacrifices for the benefit. The source account for the transaction is credited and the destination account is debited. Each transaction debit entries must equal its credit entries. The difference between total debits and total credits in single account is the account's balance. If debits exceeds credits, the account has debit balance. If credits exceeds debits, the account has credit balance. Accounting process. It involves with two different approaches. One is modern or American approach. Second is traditional or British approach. Let us see modern approach under the American. In order to understand the rules of debit and credit, according to this approach, transactions are divided into 5 categories. The transaction related to owner, that is capital, that is a personal account. The transaction related to other liabilities, supply of goods, that is also personal account. The transactions relating to assets, that is fixed land, building, cash, bank, stock in trade, bills receivable, they are real accounts. Transactions related to expenses like rent, salary, commission, wages, cartridge, these are nominal accounts. Eventually, the transactions relating to revenues, interest received, dividend received, sale of goods are nominal accounts. To sum up this, the asset, the expense and the stock are, if this item are increasing, we have to debit it. If asset, expenses and stock are decreasing, we have to credit it. On the contrary, liabilities, capital, incomes are increasing, we have to credit it. If it is decreases, we have to debit it. This is the core point of the modern approach as per the American system. Let us come to the British approach or W&D system. The W&D system is followed all over the world thoroughly. When one identifies the account that is getting affected by a transaction and the type of that account, the next step is to apply the rules. There are 3 different accounts. One is personal account, debit the receiver and credit the giver. And second is real account. It is about assets. If asset come into the firm, we have to debit it. If it goes out, we have to credit it. And finally, nominal account. The expenses and losses are debited, incomes and gains are credited. Based on this principle, we go for transaction. Ascertain the debit and credit from the following particulars and a traditional approach. Started business with capital. Started business with capital. The capital, the cash, capital is coming into the business in the form of cash. So the cash is coming into the business, comes in, so we are debiting as per the real account principle. And it is in the form of capital. Capital is a personal account. Since it is a personal, it is a giver, so we are crediting the item. Second transaction, bought goods for cash. If the goods is coming in this transaction, we have to mention as a purchase. So, for cash, when we purchase things, cash is going out and credit what goes out. As per the real account principle, credit what goes out, which is going out, cash. So, it is credited. So, the purchase is, we are purchasing goods. As per the nominal accounting principle, it is an expense, so we are debiting it. Sold goods for cash. So the cash, when we sell the goods, cash is coming into the business. Debit what comes into the business as per the real account, that is the cash. And the sales, the goods are going out and it is a income as per the nominal account principle, we are crediting it. Likewise, we are applying all three golden accounting principles for the transaction into the journal entry. Books of prime entry, that is the journal. The journal format is like this. It has 6 columns. One is the date on which the transaction occurs, and the particulars. It is the space for name of the account. Say for example, cash account, debtor, and to sales account, like that. And we are giving the narration starting with being goods sold on cash. The voucher number, reference of a batch, number of account in ledger. It is related to ledger folio, because once the journal entry is passed, the same account is taken to posted into ledger account. And there are debit column is related to debit account item, and credit column is related to credit account item. So there is equal value in debit and credit side. Example, as per the voucher number 81 of Roy Brothers on 10th May 2013, goods of 50,000 were purchased. Cash was paid immediately. Ledger folios of the purchase account and the cash account are 5 and 7, because the cash and purchase are different account heads. So they are given different ledger folios. So here the transaction is the purchase of goods. Purchase of goods for 50,000 by paying cash. So the cash is going out. So credit what goes out? We are crediting the cash account. The value is 50,000. And the goods is an expense. Purchase is an expense. It is expense. Debit the expense. So purchase account is debtor. That voucher number is 31. The ledger folio for purchase is 5. Ledger folio for cash account is 17. This is the journal entry we have to pass in this format. In the journal, there are different types of journals. One is special and general. Special journals, some transactions are permanent in all business form. That is purchase account, sales account, purchase return, sales return, bills receivable, bills payable, cash account, petty cash account, etc. So these are the permanent books which has the permanent balances. The purchases is expense, always is debited. But sales is always credited, purchase return always credited, sales return is always debited. Likewise, every journal has the permanent nature. So without changing that nature, we are accounting. But in general, it is made for adjusting or the valuation of stock at the end of the financial period. This general journal is passed. This is a book of chronological record of transaction. This book records those transactions which occur so frequently that do not warrant the setting of special journals. It is related to opening stock, closing stock, and if there is any error, it is used to rectify it. Special journal, as I told earlier, cash book, purchase book, day book, sales return, inward book, etc. There is another concept is compound journal. The many, when we are going for purchasing something, many items, for example, purchase of stationery item, pen, paper, scale, ink, eraser, stapler, etc. These are coming under a stationery category, but we are purchase it in different numbers, different quantities for different costs. So it is accounted, but this transaction is taking place based on the cash payment. So for all these purchase of different items, the only one item is there, that is cash. So the cash has the one credit value, remaining all debit value. So we can put it in the compound journal. Started business with cash 50,000, planned 24,000, and stock 4,000. Sold goods for cash 8,000 to Messrs. Christopher for 10,000. Christopher settled their account less discount 600. So let us see how the compound entries are made. A person is starting a business with a capital of 78,000, but the capital is in different form. One is cash for 50,000 and the value of the plan for 24,000 and the value of the stock is 4,000. Altogether, this is coming under one item as a capital. So this is the compound entry. Usually how we have to do? Cash account data 50,000 to capital account 50,000. Plant account data 24,000, capital account 24,000. Stock account data 4,000 to capital account 4,000. Likewise, the journal should be passed. Instead, the capital account is common in the credit as a credit item. So we are taking as a common in creditor and putting all together in debit item to get the compound journal. And the next transaction is being goods sold for cash 8,000 on credit. Cash and on credit 10,000. Actual the sales is made for 10,000. Made for 10,000. And the cash is received. Next transaction, that is 8,000 with the help of the discount is 600. That means the actual amount receivable from Christopher is 10,000. We are giving discount, we are allowing discount 600. So remaining he has to pay 9,400 as the cash. When we close this transaction with a Christopher account, that is 10,000 here, with a discount account and a cash account. That is a other compound journal entry. Once the journals are passed, we have to post the same things into ledger account. Ledger is the king of all books. It is known as for final book entry. Ledger posting. As and when the transaction takes place, it is recorded in the journal in the form of journal entry. This entry is posted against the respective ledger accounts under double entry principles from journal. And the other different documents are debit notes and credit notes. Debit notes is prepared when a person becomes liable to do something in favor of a firm. The fact is recorded by debiting that person's account. When it occurs, debit note is prepared against the purchase. Against the purchase. When we are purchasing goods for 10,000. When we receive, after receiving the goods, we find that some goods are damaged or defective. For that, we are debiting the supplier by the way of debit notes. And credit notes is against the sales. If when we are selling the goods to the other party, say for example, we are selling 100 units to a party. Out of the 100 units, the 7 units are damaged or defective when the goods are reaching in its place. By the time the value of 7 units should be credited in his name. By the time we are raising the credit note in his name. Now let us see how the accounts are posted in ledger. Let us now understand the mechanism of posting transaction into the ledger account. Consider the transaction. Rent paid in cash for 10,000. The journal entry for this transaction would be rent. Rent is an expense, so we are debiting it for the value of 10,000. And by the way of cash payment. So the cash is going out as per the real account. Credit what goes out. So we are crediting the 10,000. So this is the journal entry on January 15, rent account data to cash account 10,000. The same thing is posted. We will open 2 ledger accounts, namely rent account and the cash account. First we are opening rent account. It has 2 sides, debit and credit. Other account, cash account with debit side and credit side. So now let us read the journal entry, rent account data. Rent account data. Now we are coming to the rent account ledger. It is in the nature is a debit. So we are taking debit side. We are writing the corresponding credit account name. Corresponding credit account name. What is that? Cash account. So the cash account is to cash account. The value is 10,000. In the other way, we go to the cash account. The cash account is in credit nature. So in the ledger, we have to see the cash account, the credit side. We are writing the corresponding account head, that is rent account. So both opposite sides are accounted. The value now we can see the cash account is 10,000 is credit balance. That means our cash balance is reduced by making rent payment. And the rent account is debited, it is an expense, and the value of rent is 10,000 paid. So in this way the ledger is posted. When we post all the ledgers, the nature of the type of balance will be like this. All assets are debits in nature. All liabilities are credit in nature. Capital and owners equity accounts. Capital and owners account, it should be credit balance. The expenses and losses are debit balance. Incomes and gains should be credit balance. If it is not there is a mistake in ledger account, we can easily identify and we go for rectifying it. and there is some situation of closing balance and opening balance. When we totaling the ledger balance, the balance is carried down. These are the terms are used. CD, C oblique D is carried down, P oblique D brought down, C oblique O carried over, B oblique brought over, C oblique carried forward. B oblique brought forward. The trial balance. Finally, the trial balance may be defined as a statement or list of all ledger account balances taken from various ledger books on particular dates to check the arithmetical accuracy. The features of trial balance. It is a list of debit and credit balances which are extracted from various ledger accounts. It is a statement of debit and credit balances. The purpose is to establish arithmetical accuracy of the transaction recorded in the books of accounts. It does not prove arithmetical accuracy with which can be determined by audits. It is a link between books of accounts and the profit and loss account and balance sheet. Preparation of trial balance. It is prepared on a loose sheet of paper. The ledger accounts are balanced at first. They will have either debit balance or credit balance or nil balance. If debit balance is written on the debit column, having credit balance written on the credit column. Every debit has its corresponding and equal credit balance. The purpose of trial balance is to check the arithmetical accuracy, to ascertain the balance of any ledger, and it is an evidence of double entry has been completed in respect of every transaction, and it supports the preparation of final accounts promptly. Summary of rules. All debit balances are all assets, drawings, debtors, expenses and losses. Credit balances are liabilities, capital, creditors, gains and incomes.
Good morning, everyone. So, in this semester, you have computer applications in business uh, that we are going to see. So, before going to see that, the basic about the computers, right, the systems and everything. So, everyone knows that computer is an electronic device, right, which performs a particular task in this. Okay, a system, when you're talking about the system, is a collection of elements or components that are organized for a common purpose. The word sometimes describes the organizations or plan itself, we can say. Okay, so a system is a collection of elements or components, so that are organized for a common purpose. So we can say, okay. Sometimes we can say that it is similar to the meaning, the method. I have own car, I have own little systems like that, like this. Okay, and sometimes describes the parts in the systems in the computer system. System, we normally, what we mention is the system is a collection of elements or the components that are organized for a common purpose. A computer system consists of the hardware components so that have been carefully chosen so that they work well together, and software components or programs so that run in the computer. So normally, so what we are telling, what we can say that computer system consists of a collection of that hardware and software things. So the software is a collection of instruction, um, whereas in the hardware, that is the physical component of the system. So normally, this computer system consists of a hardware components, so that have been carefully chosen so that they work well together, and software components or programs so that run in the computer. So it's based on the platform and other things. When you're talking about the data and informations, so data must be a meaningful one. Okay, so for example, we can say 53. I'm telling it is a raw data, right? So without any meaning that it is a, it's not a informations. We can say, okay, it is a raw data. Okay, the data must be a meaningful one. Data must be a meaningful one. So data, when it becomes informations, for example, x equal to 53, here the value of x is equal to 53. Now it is a meaningful data. So now the data is information. I'm telling subject 1 marks equal to 63, right? Subject 2 mark, mark is 73. So likewise we can classify the data like this. So in this thing, the data became a informations. Okay, the data and informations, so both are how it differs. Okay, so data are simply facts or figures, bits of informations, but not information itself. So when data are processed, interpreted, organized, structured, or presented so as to make them meaningful or useful, they are called the information. Okay, so whenever the data becomes the meaningful information, a meaningful one, right? So then we can call it as a information. I just told you that, for example, the value, we may give some examples like this, right? So 63, it is a meaningless. When it becomes x equal to 63, it is a meaningful one. Now the data became a information stuff. So the information provides the context for data. An information system is a software that helps you organize and analyze data. So this makes it possible to answer questions and solve problems relevant to the mission of the organization. And next one is the business information system. Okay, that information system, for every data, whenever I told you that whenever it becomes a meaningful data, then it is called as a uh, information. When you're talking about the business information system, comprises the analysis and organization of business information through the application of technology. Okay, so the core concept management, the operations and information system theory with computer science and engineering methods and technologies to manage an organization data. And we can classify the business information systems. No single system can provide all the informations an organization needs. So even small firms have a collection of different systems. We can say email systems, sales tracking systems, likewise. Okay, the different systems can be described. Okay, the functional for that it is categorized into functional perspective and consistency perspective, sales and marketing information systems. Okay, the functional perspective in the sense identifying the system by their major business function. Okay, the functional perspective identifying systems by their major business function. Consistency perspective, so identifying the systems in terms of the major organizational groups so that they serve. There are four main types of information systems, so that we will see sales and marketing information systems. So this sales and marketing information system helps the firm with the marketing business process, identifying customers for firm's products or service, developing products and services to meet their needs, promoting products and services, and sales process, selling the products and services, taking orders, contacting customers, and providing customer support, everything. Okay, and some examples here, the examples of the sales information system. So how the sales data, right, the sales file and sales system. So that is the interaction between the sales file and management reports. So this data elements in the sales file, that is which consists of the store number, item description, item color, right, size, unit price, unit sold, date, everything is available in this. Okay, so this is the sales information system. So how the sales file, it goes to the management report, that is the sales via the sales system. Okay, so based on the online queries, right, so that will be converted into that record management reports. Okay, so that is the inventory and the production systems. So that inventory, it makes whether it is the available or not, the product, everything. Okay, so this systems captures the sales data at the moment sales takes place to help the business monitor sales transactions and to provide information to help management analysis sales trends and effectiveness of marketing campaigns. Okay, manufacturing and production information systems. It's mainly deals with the planning, development, and production of products and service and controlling the flow of production. Okay, so manufacturing and the production information system. It's mainly deals with the planning, development, and the production of products. Planning, development, and the production of products and the service, and controlling the flow of production, the entire flow also. Okay, it will be considered. And this is the overview of an inventory system. So shipment and order data. Okay, so that is the inventory control system. So inventory master file, which consists of that master details. Okay, that is the item code, description, units on hand, units on order, everything will be there. Units. So how it moves to the based on the online queries, right? So the management reports will be generated. Okay, so item code, so that corresponding descriptions will be there, and units on hand, availability, and units on order. The first one 6361, the order is 0, and then the second one 4466, the power cord, the um, The units in hand is 55,710, but units on order is exceeds that 88,660. Okay, so likewise the item code and the descriptions will be varied. So the availability of that stock is also we can consider like this. So this system provides informations about the number of items available in inventory to support manufacturing and production activities. Finance and accounting information system, that is finance and accounting information system, so keep track of the firm's financial assets and fund flows. So this accounts receivable system. Okay, so this is the typical diagram, so you can see the master file and then how it interacts with the management reports and all, right? So accounts receivable, so invoice and customer data to generate the ledger. So here this master file contains uh, accounts receivable. Master file contains so data elements in the account receivable system, so customer number, name, address, credit rating, credit limit, days late, invoice number, amount paid, balance, everything is there. Okay, so that is the thing, that how based on the online queries, so how it will be generated. So here also the customer number and the name. If you type the customer number, so automatically which provides the name and everything. Okay, so current balance, right? So any dues in first month, second month, so third month, likewise. So total, likewise. So accounts receivable, aging report. So it will be calculated like this. Okay. And when you're talking about the next thing, that is the human resource information systems. Okay, this is the maintain employee records. Mainly, we're talking about the employee records. So tracking employee skills, job performance, and training, and support planning for employee compensation and career development. This HR information system, human resources, maintains the employee records. It maintains all the employee records and tracking their skills, employee skills, and job performance. Okay, and training and support planning for employee compensation and career development. So everything done by this human resource information system. Okay, so this human resource information system, when you're talking about, so I already told you it maintains the employee records. And similarly, uh, when you assess the employee skills also, okay, so HR should know information, right? In HR information, so they should know what is the employee skill and job performance and training. So what is capable for that employee, so what is his strength and everything. Okay, so the HR maintains all the records about the employees and their skills and job performance, everything, keep track of, right? Maintain all the informations about the employees. Okay, and then when you're talking about the employee data, various departments. So here also one employee master file will be there, and then in that master file which contains the employee number, name, address, department, age, marital status, sex, salary, educational background, job title, date of hire, date of termination, termination reason, everything is the employee master file. So how it interacts with the management reports, the human resource systems. Okay, so employee data, so each and every record I just told you that will be stored by the HR systems. Payroll also, right? So any appraisal or any termination, anything, So HR must have all the records. So based on the human resource system record, so we can decide about the employees, right? So whether we can give promotion or whether we can give termination, right, or suspend, whatever it is. So any actions will be taken place based on the human resource systems one. So this termination report, that sample termination I'm telling you, that date, name, number, reason, right? So that John Hansen, that number is 29433. So the reason is position eliminated. Okay, another thing is Patricia Cotran 14327, so retired. So that record will be deleted. And then Alan 21224, so left the company. So reason, so what is the reason behind this? Okay, so what are you getting is, so each and every record should be maintained in this HR systems. And there are four main categories of the system from consistency perspective. So transaction processing system, right? And then management information system, and then decision support system, okay, and then executive support system. So let us see. The first one is transaction processing system, TPS. This TPS are basic business systems, so that serve the operational level of organization by recording the daily routine transaction required to conduct a business such as payroll and sales receipt, etc. And management information systems serve a middle manager's interests by providing current and historical performance informations to aid in planning, controlling, and decision making at the management level. So MAS, we typically compress the TPS data to represent regular reports on the company basis operations. So hope you understand the transaction processing system. I'll repeat once again. Or basically, it is a business system. So that serve the operational level of organization by recording the daily routine transactions required to conduct business such as payroll and sales receipts, etc. And whereas the management information system serve a middle manager interest, so by providing the current and the historical performance informations to aid in planning, controlling, and decision making at the management level. Okay, so that is the management information system. So this MAS is compressed TPS data to present regularly reports on the company's basic operations. Understand this? Yes. So how the management information systems obtain their data from the organization's TPS. So here the transaction processing system and management information systems. So how it will be uh, interacted. Okay. So we have the order file, right? Order processing systems. So that will be interacted with the sales data. And similarly, the production master file, so which interacting the physical, the material resource planning system. Okay, so that will be the unit product cost data. Okay, and similarly, the in production master file, so the material source planning systems, so other product change data will be there. Okay, the general ledger system. So the accounting files that is interacting with the general ledger system, right? So how it will be connecting with the MIS expense data, okay? And then MIS and reports and manages everything. So it will be like this one. Okay, so hope you all understand this. Um, The next one is the decision support systems, DSS, or business intelligence systems. Help managers with non-routine decisions so that are unique, rapidly changing, and not easily specified in advance. This decision support systems more analytical than MIS, that is a management system. Okay, using a variety of models to keep analyze the internal and the external data, or condense the large amount of data for analysis. So this is the decision support system. Okay, so you understand this decision support system. So this decision support system or business intelligence systems so help managers with the non-routine decisions. Okay, so it may be a unique one or rapidly changing, often changed, and not easily specified in the advance. So that is the thing we are talking about here. So this decision support system um, are more analytical than management information system, and using a variety of models to analyze the internal and external data or condense large amount of data or analysis. So this is the voyage estimating the decision support system. Okay. Uh, so this is the voyage estimating systems. Okay. So the PC. So how will we interact with the analytical models database? So this may be a ship file, example speed capacity, support distance restrictions file, fuel consumptions const file, and ship short term line history cost file, and port expenses file. So everything is mainly done. And the last one is the executive support system. So what is the executive support system? It is on an important part here. It provides the generalized computing and the communication environment, and this helps senior managers address strategic issues and identify long-term trends in the firm and the environment. That executive support system address the non-routine vision regarding the judgment, evaluation, and um, insight, because there is no agreed on procedures for arriving at a solution. And moreover, this executive support system um, prevent um, that normally this address for the data from many internal and external sources through an interface, so that is easy for senior managers to use. So often the information is delivered to senior executives through a portal, maybe a portal which uses the web interface to present the integrated personalized business account. So this is a typical diagram. So model executive support system. So this ESS works workstation or portal. So how it will be interactive? So it consists of menus, graphics, communications, and the local processing. So here also we have classified into mainly the internal data and the external data. So when you're talking about the internal data, so TPS or MIS data, okay, and financial data, the office systems, and modeling analysis. Here also in external data, it's the Dow Jones, and internal the internet news feeds standard posts. Okay, so that will be we are getting the ESS workstations portal. So menus, graphics, so communications, so local posting. And next thing, we are going to see the main features and functions of the information systems. So telecommunications, right, and people output, right. So it's mainly deals with the output under software. So that is the telecommunications in organization is used as informations. So maybe sent to others over an internal intranet connections to ensure that it is not intercepted by the competitors. The firewall will be needed to ensure okay security within their work. So some cases the separate and dedicated networks is used to ensure completely security. Are you getting this? So the entire the feedback loops or the results of the use of the outputted information. So this can either be direct effect or lead to something so which will benefit the organizations in the future. Okay, and then we're talking about software. Software step is where the data get grounded to the information. So it could revenge from adding values to make a total or say solved by separating victims. Okay, certain period of time to complex calculations done by the computer systems. So that can adapt to missing informations or select different criteria that may be extended the course. Next, we are talking about the closed and the open system. So this closed and open system, so data, when data is stored, it is stored at the highest detail level possible. So the IT department will make regular backups of the data. At least one copy of the backup should be stored separately in case of disaster. And in closed systems, so user may come, okay, the user may sometimes may have some choice over what they can report or on what are the limited predefined output formats. These consist of a graphical formats and are aimed at the managers. And then whilst the open systems, so here is a format and the predefined outputs formats. So these consist of graphical information animate aimed at managing. So Visual that open system here is a great flexibility on what can be reported and the format it is presented in. Due to the flexibility of the system, more training may be needed before the systems can be used effectively. So these systems are more aimed at the analytical, analyze next we are going to see the main characteristics of the good management information system. First, relevance, accuracy. Okay, relevance, accuracy, and the usefulness. The information a manager receives from a MIS has to relate to the decision the manager has to make. So the effective MIS, yes, the effective MIS takes data that originates in the area of activity. So that concerns the manager at any given time. The second one is the accuracy. The key measure of the effectiveness of an MIS is the accuracy and the reliability of the information. The accuracy of the data it uses and the calculations is applied togetherly determine the effectiveness of the resulting information. Then usefulness. The information a manager receives from MIS. So maybe relevant and accurate. So but it is only if it helpful, that is okay the within the partner distance. The next one is the timelines. We are talking about the timelines. So the MIS output must be current. The management has to make decisions about the future of the organization. So based on the data from the present, even when evaluating the trends, the more recent the data, the more these decisions will reflect the present reliability, and accordingly anticipate their effects on the company. So this is the timelines. When you're talking about the completeness, an effective MIS represents so all the most relevant and useful information for the for a particular issue. So if some information is not available due to the missing data, so what we can do? So it is present is highlights the gaps and either displays possible scenarios or presents possible consequences resulting from the missing data. And mainly we are seeing the three fundamental roles of information systems in business. So information storage and analysis assist with making decisions and assist with business process considerations when implementing information systems. When you're talking about the information storage and analysis, so at the date of publications, many companies no longer manage their data or information manually with registers and hard copy formats through the adoption of information systems. So companies can make use of sophisticated and comprehensive database. So that can contain all imaginable pieces of data about the company and assist with the making decisions. So long-term success of company so depends upon the adequacy of strategic plans. So an organization's management team uses information systems to formulate strategic plan and make decisions for organizations longevity and prosperity. Okay, so the fundamental rules of the information systems. So that is involved in the business perspective. Okay, the information storage and the analysis. So when the data is published, right? So many companies no longer to manage their data, so that is difficult. Hard copy formats. So how they are maintaining the hard copies, right? So if it is hundreds, we can keep, right? It's 200, 300, like it. So it is like 1,000, 2,000 records, 3,000 records, 5,000 records, 10,000, 1 lakh records. So everything that is the hard copy format is very, very difficult. Okay, so through this adoption, information system companies can make use of the sophisticated and comprehensive database, so that can contain all the imaginable pieces of data about the company and decision making system. That is the making decisions. So assist with the making decisions. So here, the long-term success of the company mainly depends upon the adequacy of its strategic plan. Okay, so an organization management teams uses information systems to formulate strategic plan and make decisions for the organization's longevity and prosperity, and assist with business process. So the information system aid business in developing a larger number of value added systems, okay, in the company. For example, a company can integrate information systems with the manufacturing cycle to ensure that the output it produces complies with the requirements of the various quality management standards. So considerations when implementing the information systems. So implementing information systems with an organization can prove to be costly. So the implementation cost include not only the installation of the system, but also the employee training sessions. Okay, so it is the assist with the business process and the considerations when implementing the information system. When you're talking about the assist with the business process, so how the information systems aid business in the developing a large number of value-added systems. Okay, and we can say some examples also. The company integrate information systems with the manufacturing cycle to ensure that the output is produced complies with the requirements of the various quality of the management system. Okay. And when I talk about the considerations when implementing the information system, implementing information systems within an organization take prove to costly. And the implementation cost is also is a major role. Include the not only the installation of the system, but also employee training sessions. And what are the main benefits of the information systems in business? So even simplest use of technology can dramatically improve your business productivity and efficiency. Okay, so arguably the greatest advantage of this system is their ability to give users other information. So they need to carry out tasks. The importance of the information systems. Information systems and information technology systems can produce the custom data to help with specific tasks or issue. This custom data to help with the specific task or the decision making, you can say. Secondly, the custom format maybe contains the list, charts, etc. So which can be tailored to the user need. And then real-time data. Real-time data particularly useful where the fast action is needed. Okay, example, mechanical default. And then archive data, puller, particularly useful for reports, analysis, and the business plan. The technology can also we have, right? So other ways of the information systems helps in the business. So here we're talking about the technology can also benefit business by enabling, and then operational efficiencies, operational efficiencies and cost reductions. Talking about the cost reductions, supply of informations to decision makers. Okay, supply of informations to decision makers. So better customer service, continuous availability of the system, and growth in the communication capabilities and the methods. So these are the main, that is the other ways for the information systems to how it will be helpful for the business. This technology mainly it is a benefit business by enabling, that we can say operational efficiency, right? So cost reduction is one of the system, right? Helps the business, and supply of information to decision makers, and then better customer service, and then continuous availability of the systems. So growth in communicating capabilities and methods. To maximize the benefits of IT systems, we have to fully utilize all its features and functions. So use instant messaging, emails, voice, and video calls, and even chatbot, right? The technology to improve the communication. Okay, so with customers and suppliers, this could save your data. So integrated IT systems to reduce the administrative cost. That is also we can say. So for example, you can link your online e-commerce shop front with stock control and accounting systems to streamline your process. See how to integrate your back office systems. Okay. Use labeling products with a unique number and scannable barcodes to boost your efficiency and improve your stock. So use different solutions such as customer management systems or mobile technologies to improve levels of customer service. So these may help you record, right, organize and plan contacts with the customers, and access the customer details. The record. So organize and plan the contact with the customers, the access, the customer detail. Okay, so everything. And what are the main components of the business information system? So the computer age is introduced new element of business, new universities. So on the multitude of the other informations, okay, so which deals with the collecting and organizing the data and the informations. So an introduction system is described here. What are the main components we can see? So computer hardware, this computer hardware, this is the physical technology that works with the information hardware, can be as small as smartphone. Nowadays everyone is using, right? So that fits a packet or the large as a supercomputer. So that files building. So hardware also includes the peripheral devices that work work with the computers such as keyboards, external disks, or any nodes. Are you getting this? So how the in business information system, what is the role of computer hardware? And similarly, you can say the computer software. The hardware mm, needs to know what to do and what is the role of software. So software mainly is a collection of instructions. Okay, so it is a collection of or group of instructions we have. Okay, so the primary piece of the system software, we can classify the software in two main categories: the system software and the application software. So that the operating systems, right, the compiler, linker, loader, everything you can say the system software, and application software is not like that. And we're talking about the telecommunication. So this component connects the hardware together to form a network. Connections can be through wires such as Ethernet cables or fiber opticals, fiber optics, or wireless such as through Wi-Fi. The network can be designated to tie together the computers in a specific area, such as the office or the school, right? The local area network, and the database and the data warehouse. So this component, we can say, that is the material, right? So other components work with resides. A database is a place where the data is collected and from which it can be retrieved by querying it using one or more specific criteria. And then human resource and the products. Final and possible most important component of the information system is the human element. The people that are needed to run the systems and the procedures they have, right, the knowledge in the huge database and the data warehouse can be turned into learning so that can interpret what was happened in the past and guide future actions. Okay, so do you have any doubts in this topic? So you can mail me or you can contact me. uh, do you have any clarifications in this unit? I can clear all your doubts. So when you're talking about the system and data information, repeat once again that the system is a collection of elements. System is a collection of elements or components that are organized for a common purpose. Okay, that is the thing that we are normally called as a system. So computer systems also you can say laptop also we are telling, right? The complete system consists of the hardware components so that have been carefully chosen so that they work well together, and software components or the programs so that run in the computer. And when you're talking about the data and informations, right? So how the data is converted into information, right? So what do you mean by data? Any raw data, right? So for example, I'm just telling the figures, right? 43, 53, 73. So everything is a raw data. It has no meaning, right? So I'm simply assigning some values. X equal to 53, Y equal to 93, Z equal to 100, like this. So each and everything I separated and I give and meaningful information I am feeding. So in this case, the data becomes information. So the raw data, how the raw data, it converts the raw data to information. So that is the thing, data and informations combined, right? So when data are processed, interpreted, organized, structured, and presented so that make them meaningful or useful, so they are called the information. So that information provides context for data. The information system mainly, so it is the mainly software so that helps the organization organize and analyze the data. So this makes it possible to answer and solve problems relevant to the mission of an organization. Hope you all understand this, right? We discussed information systems. Also, we have seen, right? It comprises the analysis and organization of the business informations through the application of the technology. And the types of business information systems also we have seen the functional perspective, business perspective, right? Sales and marketing information system, and there's the finance and accounting information systems, and keep track of the firm's financial assets and the funds flows. So this is the typical diagram for the account receivable systems. Okay, so each and every system has its own master file. So the master file contains all the record about the employees. Okay, so hope you all understand in today's class. So do you have any doubts or any clarifications? Okay, any doubts or any clarifications in this chapter? You can mail me, right? You can ask or you can call, right? And then we'll see that. Okay, so thank you everyone. We'll see in the next class. Thank you. Thank you. One and all.